What is Binance Grid Bot Trading? Grid trading is a strategic tool that allows you to make a profit by placing a series of long and short orders at set intervals around a set price. In this way, it constructs a trading grid. Grid trading performs the best in a volatile market when prices fluctuate at specific intervals. By automatically executing low buy order corresponds to the high sell order, it guarantees profits each time when the selling price is higher than the buying price during a sideways price movement, thus does not require predicting the direction of the market movement. Grid trading is a trading bot that automates the buying and selling of futures contracts. It is designed to place orders in the market at preset intervals within a configured price range. Grid trading is when orders are placed above and below a set price, creating a grid of orders at incrementally increasing and decreasing prices. In this way, it constructs a trading grid. For example, a trader could place buy orders at every $1,000 below the market price of Bitcoin, while also placing sell orders at every $1,000 above Bitcoin's market price. This takes advantage of ranging conditions. How does grid trading work? Let's understand how it works. Suppose you expect Bitcoin to hover in a price range between $50,000 to $60,000 in the next 24 hours. In this case, you could set up a grid trading system to trade within this predicted range. On the grid trading panel, you could set parameters of the strategy, including the upper and lower boundaries of the price range, the number of orders to be placed within the configured price range, the width between each buy and sell limit order. In this scenario, as the price of Bitcoin falls towards $55,000, the grid trading bot will accumulate buy positions on the way down at a lower price than the market. As prices recover, the bot will sell on the way up at a higher price than the market. This strategy essentially attempts to profit from price reversions. Why you should consider grid trading? I am ready to share my ABC on why it is an amazing technique. A. It's a non-directional strategy. This happens to all of us. Whenever we buy an asset it dumps, whenever we sell it pumps. As traders we are all driven by emotions. Fear and grid hunt us. We never tend to take advantage of opportunities that price action always gives. Trying to predict the direction of the market is somehow close to an impossible venture. As the random walk hypothesis states, prices evolve according to a random walk and cannot be predicted. What moves the market? News of any kind, related to politics, economics or even a new pandemic, that no one can predict. Traders reacting to the news, speculating, adjusting their strategies in randomness. Prices have no memory, and they reflect all available information. So, predicting price changes is predicting the future. Then, why are we always gambling to find the right market direction? We may not if we use grid trading. Even though you might be already familiar with it, grid trading works by setting up buy long and sell short orders in a predefined price range, creating a grid-like formation. It will buy low and sell higher every position until you end it. So it doesn't care if prices go up or down, because in downturns you will be buying the then sell in upturns. B. Passive income generator. Stocks and cryptocurrencies space is full of traders falling in the get-rich-quick idea, but makes greater sense to design techniques to earn a passive income. Less gambling, more strategies. Why grid trading offers this possibility? Well, every buy and sell represents a match with an associated profit since the selling is always at higher prices within the boundaries of the grid. And even if that profit is just a couple of cents, there may be hundreds of matches every day. That gain is a potential passive income. Whether the price of the asset goes up or down, you will still be making matches and thus profiting from the grid. As an analogy, you buy a house, grid investment, then you rent it, matches. Whether the value of the property goes up or down, you are still making consistent monthly revenue through the rent. See compound your capital. The magic of compounding. The story of the king in India who ordered a mathematician to design a game illustrates it. After pleasing the king with the creation of the chess, the mathematician asks to be paid with grains, starting with 1 grain in the first square of the board and doubling in each square. The king thought it was a bargain and accepted it. After several squares, he realized that there was no crop in the world that could pay the mathematician, so he finally has to hand the kingdom to him. If you are a young man in your 20s and start investing $1,200 every month until your 60s with a 20% return annually, how much would you accumulate? 1 billion. Not bad. Grid trading is a great tool for compounding because after some days of operations and an accumulation of matches you can reinvest it in the grid. By increasing the size of the buy-sell orders in the grid, you can boost the profit for every match and generate higher profit, maintaining the rate of return.